Thank you for joining me. I'm Alex, and I'm sorry for the green shirt in front of the green screen. I would like to talk to you about Roku. So, Roku had a bit of a rough day today, so I figured I should make a video about it, see if it's still a stock you want to invest in, see if it was ever a stock you wanted to invest in, and see where things might go in the future. So, Roku makes streaming hardware, so that means little USB sticks you can stick into TVs, or I guess HDMI sticks if you want to be technical about it. Little boxes that you can plug into your TV and actual TVs, or rather the hardware for making them smart-ish. So you can buy a TV that has Roku in them that kind of provides a streaming experience, which means Netflix, YouTube, whatever the hell you want. So the news today was that there's yet another manufacturer that kind of wants to do the same thing in Facebook, which I didn't know Facebook made hardware like that, but apparently they have been for a while. So they had a smart speaker-ish system, so they want to get into the TV things. So price is $130, down 13% today on that news. And the PE is minus 600, which means they're ever so close to being profitable. So they lost about 20 cents per share at a stock price of almost $130, which means 650-ish, minus 650. Anyway, so dividend and yield is 0. Payout ratio is also 0. So obviously the dividend investors are already out. Revenue is $740 million, which is up 50% from the previous year, and the gross profit is also up about 50% from the previous year. So things are looking pretty good there. Earnings negative $9 million, down from negative 63-ish million. So previous year they lost $63-ish million. Now they only lose $9 million, which means that they're extremely close to being profitable, and I still expect that to happen in the current fiscal year. They report earnings 31st of December, which I think is kind of a bad thing for most companies, because you kind of, the holiday shopping doesn't end on the 31st of December. You know, you kind of like have the whole discounted deals after Christmas and stuff that kind of still plays into a lot of things, and people take things back to the store to exchange them for other things and all that kind of thing. So I think that what Walmart does, not because of this, just historically, was ending the fiscal year on the 31st of January is a much better thing, because you have the whole holiday season in the fiscal year, or you rather end the fiscal year right after the holiday season, which I think is a good thing. So total assets $465 million, up 25%. Total liabilities pretty much even at $220 million, and net tangible assets of $242 million. Which means that the balance sheet is definitely not looking terrible. And so, to sum that all up, there are many players that want to compete with Roku in the space that they're in, but none of them is in actual TVs that you can buy off the shelf. So you have Google with their Chromecast, you have the Fire Stick from Amazon, you have the Apple TV from, I guess you guessed it, Apple, and then now you have Facebook trying to get into the business for reasons. So with all that said, I really don't think that Facebook is going to be a big player in the space, and I don't think Facebook entering the market really makes a difference. So the Roku is obviously the first in the space and the biggest player in the space, and I don't think there's any credible competition beyond Google and Apple, because people like their Apple products and they're probably going to buy an Apple TV rather than a Roku stick if they can afford to. Obviously, Apple TV is a way higher class product, so it's way more expensive. So that's why I don't think that Facebook entering the space really makes a difference here. With that said, I don't suggest buying the stock anyway. So obviously, as a dividend investor, you're just out. As a value investor, with a company that's never made a profit, I don't think that you want to invest in them, even though they're right on the verge of being profitable. And I would assume, just based on these numbers, that they're going to be profitable in the current year. And as a growth investor, I think that the growth is really good. I think that they have, at least in the near term, maybe midterm, a pretty good future. But they could get disrupted from all sides fairly easily. So I don't think that it's unfeasible for a player like Samsung to enter the market, make smart TVs, and they already do, which would directly compete with Roku. I would expect all TVs to be smart TVs in the fairly near future. So if Roku itself does not get onto that TV, I think something else will. So Samsung has their own system already, despite what I just said, and other TVs also have other systems. Now, Roku has experience, they have a good user interface, so there's definitely some value there still, but all in all, I think that because the competition is going to be there, and because you may not see it coming when just every TV has a smart system that's not made by Roku, I don't think you will see that coming, and I think that Roku itself could disappear fairly quickly. So I think that even for a growth investor, there's just way better opportunities out there where you can at least see it coming when the company is going to be disrupted. So with that said, don't recommend that stock for pretty much anyone. And that's it for me for today. If you haven't already and you like this video, then make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.